Hey folks, 8th of November, Tuesday here, and a pretty quiet day on the data slate ahead. So we're kind of come in and trade this US session here. You can see iPhone demand is cooling and Apple cutting their production forecast. But let's have a look at the S&P here as we kind of go into today. Really, bit of weekly bars here, all right, weekly bars. And we've seen big pullbacks last week on a disappointment really on the Fed pivot and whatnot. And here we are kind of continuing on, I suppose, from the strength that we found in this kind of whole area down here, which was really the lows of October here, early October. And, I think we can really, as long as we can hold this area 38.20s, we should be able to bid back on up here. Some significant levels to be looking out for 38.38 here as well. So we can see a lot of these levels now coming into play today. 38.38 spot 25s and 38.50s half on the upside, and really holding quite well so far, up just a small bit, 0.24% on the S&P. The Dow as well. Really have a look at the Dow here on the daily. Again, weekly bars, right? But what you can see is a market that is coming close to kind of its downward bear trend here. Okay, so if we just kind of make this a little more obvious on the downside here, you can see we're really knocking on the door of these pullbacks we've seen in this bear trend. Weekly bars, all right. So a nice little zone that we're trading here is 32,656s up to 32,847s on the Dow. So really, we can then kind of transition to looking inside the 60-minute or 30 minutes here in a second. But if we just kind of do this, widen it out a little bit, you can see that while we had a lot of excess on the lows here last week, right? We'll zoom right in here. Excesses on the lows here last week. We are now approaching where we opened last week and looking to bid above here. Don't really have any catalyst for major upside or downside. You could be looking at that Apple news thinking it may be quite bearish for Apple. And, you certainly couldn't be blamed for thinking that. But here we are knocking on the trend. All right. So we pierced through it this morning. I think we're going to rip to the upside. 33,253s targets for the Dow on the longs today. I was looking for a little bit of weakness to come in yesterday. We did take shorts on the open. Traded down to about 37.75s yesterday, and then just returned and finished strong on the close on the Dow. So we're looking for longs here. We're looking for longs in these markets on equities and Nasdaq as well. We'll have a look at the Nasdaq on the daily or weekly bars, I should say. So let's zoom right in here. We'll get this chart normalized a little bit, and so you can see incredible longs to be had there the week of the 10th of October. And up we go. So big pullback, as I said last week, on the pivot sort of jitters. And I think we can at least get above 11,125s, which we're about to trade soon enough. And then from there, it'll be 11,256's target for the longs. So that's equities. On oil, bit of pulling back really because China are sticking to the COVID zero policy that they're really hammering to the people out there. So oil just pulling back some of the gains it's had from yesterday and last week. I think, look, we're still pretty supported here around $90, 89.02s as well. And the invasion below top, 88.68 on this December Z22 contract. I think a little reversal down here would be a nice long. There is a bit of a trend developing here on the weeklies. We could just kind of make that a bit more obvious here. Not seeing, it's coming in actually around 87s. So if we were to retest this pullback on the trend on the pullback, it would be a long 87s to come back to where we pretty much are now. And so looking at that on a 60-minute or a 30-minute chart, that would be quite the pullback. It would be about 3.75% down from where we are now. Anyway, we could go on and on and on forever about oil. All right, we're going to close it up there, and I'll see you in Discord, or I will see you here tomorrow on YouTube. All right, take care. Bye-bye.